Good morning, everyone. Welcome back to Monica Pa. Aiman here. Okay, so looking at the S&P 500, right? So it plunged to close at 6,798 points on Thursday as investors dumped the AI stocks after the Google capex. The capex shock, right? Where Google planned to spend around 185 billion, and also this part fears that the profit margin will be crushed by the AI cost. So you see, sentiment also turned bearish as the soft landing narrative face a reality check, a fueling recession, fears that just hours before the NFP data. So I think do expect a further decline for the market today. The risk-off mode is intense with the Bitcoin, crushing near the 63 $1,000 level and potentially eyeing for uh, the weekly 200-day SMA lines, and also the US recession fears resurfacing, right? So I think all eyes on the NFP data tonight to save the overall trend. Right, so looking at the China A50 futures, well, it closed flat, I would say, on Thursday's session, outperforming the spot market as investors digested the news that the solar company is not partnering with Elon Musk, also reversing the previous days speculative rally, like what I mentioned on previous morning cuppa. So despite the Solarvest and also the weak mining stocks, I think the index found support from falling crude prices, which also boost the China manufacturing margins, and also late rebound in the Hong Kong tech names. So do expect a bullish move at least for today, right? With the US stocks to see at least some rebound overnight, and the mass rumor flash out complete. I think funds will likely to rotate back into the corporate chips ahead of weekend, right? Also, to look at the WTI crude oil futures, well, it retreated at close yesterday to close somewhere around 63-ish level on Thursday's session as the war premium faded after the official confirmed that US and also Iranian diplomat will meet in Oman on Friday, averting the immediate conflict. So however, if you notice here, sentiment was further hurt by the demand concern, also by the um, Shell's poor earning, the rising jobless claims also made the battery worries, um, about the recession might kill the demand, also overshadowing the tight inventory data. So for this WTI futures, I expect high volatility at least today, as the market is trapped between those war and also recession news, I would say. So uh, our support still remains back at $58 level, followed by $55 dollar level. So for now, we still keep our bullish sentiment of our bullish view unchanged, aiming for the $68 level together with this $70 level resistance. Right, into the Malaysia market. Well, for the KLCI, it retreated to close at 1731 on yesterday's session as the overall, I would say, or regional sentiment turned sour. The massive 3% crash in Kospi caused by the tech sell-off as the foreign fund to pull back from the risky asset across Asia. So if you look here, our local tech, Inari MPI face heavy profit taking, mirroring the weakness in the Nasdaq, and also uh, while the plantation stock provided some support to prevent the steeper, steeper decline or steeper drop. So expect a rebound attempt, well, at least for today, for today's session, as bargain hunters to look the uh, oversold at somewhere around 1730, 1735-ish zone or level. However, upside remains capped at 1770 or even 1780 level for KLCI. All right, moving to our FCPO. Okay, so well, FCPO to close lower on yesterday's session as the regional panic by the tech stock again, right, spill over into the commodity, forcing the funds to liquidate the long position to raise to raise cash, right? So also you can see here the sentiment was further dampened by the weakness in the Dillon palm oil, which also tracked the overall or the broader Chinese market lower. So this also ignores the supportive forecast that the general production will likely fell somewhere around 10-15%, right? So expect the market, I mean the FCPO to test the crucial 4,180 for 180 support for today, with the risk of mood still dominating the global market ahead of the job data tonight. So I think buyers will likely to stay, stay on the sideline. Um, yeah, we would likely to see a rebound for this session. Well, at least a coming session or coming weeks. As long as the commodity to stay above this 4,100 level, or even this is our stop loss lah. So for now, we keep our positive trading bias unchanged, aiming for the 4,400 and also 4,500 level. If this level of support for 180 to rebound in coming session lah. Right. So yeah, that's all we have for today. I'll stop here, and thanks everyone.
Hi, morning everyone. So two reports from me, YTL Power and Petgas. So for YTL Power, we maintain our buy with target price of 4 ringgit and 90 cents. We expect power margins to remain quite stable this year, mainly on stable fuel costs. For Power Seraya. And also we do note that about majority of their contracts are actually signed long-term with retail customers. So if you look at their retail prices, in terms of energy prices, they remain still one of the lowest in the Singapore market. So that's why we think their margins will remain quite steady, about 17% for the next 3 years. Secondly, for YTL Power, they also see a 20% upward tariff adjustment last April, which resulted in a turnaround for the Wessex Water Division. But we do expect earnings to remain stable, but we also see another potential 2% earnings upside for Wessex Water, because the regulators are also looking at another potential 5% tariff hike to be implemented in April. We need to account for higher capex as well as the higher interest costs. So this decision is expected to be known by 17th of March. So if it does happen, there will be another 2% upside. Third catalyst we're looking out for YTL Power also is for them to build a new gas plant. Recall that the Energy Commission has put out a tender for up to about 5 to 6 gigawatts of new gas plants to be built for commissioning by 2030. We think that YTL Power is one of the front runners given their experience as a power producer. So if they do build a 1.4 gigawatts gas plant, that is about 5% upside to numbers. And we do understand that they already have secured some gas turbines for this as well. So overall, I think we do like YTL Power. I think the DC earnings should come in a bit more materially in this coming quarter results. So we maintain our buy call. Secondly, on Petronas Gas, we have a neutral call on Pet Gas. We think that their share price is fairly valued to reflect their average 5% tariff hikes for their regasification and gas transportation divisions, which was announced last month. So we think that the market, as well as our numbers, have fully priced this in. That said, I think the other positive catalyst for them is the announcement of RGT3. So earlier this week, Petronas, the parent group, has announced that they are going to procure LNG for Qatar Energy for 20 years. This means that basically this new LNG basically will be supplied for the new gas plants that will be coming out in 2030. So with that, we do think that the announcement of RGT3 should happen soon. So if this happens, we think that the capacity will likely match those the combined capacity for Sungai Udang as well as Pengerang. And based on that, we do think that they would provide about 4% upside to our target price. Apart from that, we do expect margins to come up to improve by 1 to 2% in terms of percentage points because of the lower crude oil prices, which their internal gas costs is actually based on. But again, we have a neutral call because I think numbers already fairly reflect those tariff hike, and the upside for the RGT3 is only about 4%. But they do give about dividend yield of 4%. So that's based on absolute payout of 72 cents, which they've maintained for the last 4 years or so. So it is a neutral call. Yeah, I'll stop here and then I'll pass on to my colleague next. Thank you.
Thank you, Matt. We have a company update on Solarvest today, following the announcement made yesterday. So to recap, in early January this year, China announced that starting April 2026, they will remove the 9% export subsidy on solar panels and reduce the rebate on batteries from 9% to 6% with full removal by January next year. So we are going to see a 9% increase in the panel price after April this year. So what happened with Solarvest is that they have locked in the solar panel prices of up to 2 gigawatt for the next 1 to 2 years, backed by a 10% deposit from both Solarvest and the China supplier. We understand that the 2 gigawatt is more than enough for Solarvest because the panel procurement for certain projects like LSS 5 and LSS 5 Plus are done by the project owner. Basically means back to back. So there's no impact for Solarvest on this. And moving forward, like all the other sector players, Solarvest will pass through the higher module procurement costs into the new EPCC contracts of financial modeling, which has been seen as the industry norm. And also, we understand that there are some market concerns about whether the China supplier will default. But in our view, this is unlikely to happen. Given that Solarvest secured a 2 gigawatt panel by end of 2025, we assume that they are getting the panel with a price of $0.09 per watt, with a current market price spiked to $0.1 to $0.11 per watt. In theory, this provides incentive for suppliers to default despite the 10% deposit. But we don't think that the China supplier will default because, for one, if we look at the panel prices for the past 5 years, it has been volatile all the way. And we have never seen a widespread default or precedent cases by the big players. And number two, Solarvest suppliers are top-tier China-listed manufacturers with a long operating track record. For these big players, legal and long-term relationship considerations are likely to outweigh any relatively small short-term financial upside, reinforcing our view that supply default risk is low. And also, despite that Solarvest is the leading solar player in Malaysia, they are still considered small to other global players. This actually gives an advantage to Solarvest because not everyone lock in the panel prices at $0.09 per watt. If the China supplier default, they're actually putting themselves on a risk against all the other big players who didn't secure 9 cents. So what we're most likely to see is that actually shipping delays or delivery rescheduling rather than outright contract default. And number three, after we did our correlation analysis, we find out that all of the key materials that have been used in panel manufacturing, panel prices have a correlation of close to 1, or so-called nearly perfect positive related to polysilicon, not silver. That means Given the polysilicon prices are quite stable at $7 to $8 per kilogram for the past 2 years, we do not expect further cost pressure on the panel prices. In other words, the recent spike in silver prices had no major impact on solar panel prices. And last but not least, any financial impact on Solarvest will be partially mitigated by the 3.2% appreciation of ringgit Malaysia against Chinese yuan renminbi year to date. So after all, we make no change to our earnings forecast as the export subsidy cuts has negligible impact on the earnings. Our TP was maintained at 3.49. With the current price level, Solarvest is now trading at its 3-year historical PE average of 23 times, where we see as a valuation floor given a strong earnings trajectory and robust project pipeline. We believe the recent steep sell-off is overdone and more than pricing any concern over the changes in China policy. In short, we see current levels as an attractive re-entry point ahead of their next growth cycle. And that's all from me today. Thank you for spending the time with us. I'll pass the floor to the next speaker.
Thank you, John. Good morning, everyone. This is Vanessa from the Warrants team. So in January, I actually have issued more than 30 new warrants. Okay, so I'm going to just briefly share on what are the active ones, what are those warrants that is traded popularly among the investors. All right, so our first tranche, we actually look at kind of high traded volume in CIMB C2J, so which means that besides from the mother share, the investors are also liking the core warrants like this to actually increase the leverage exposure on their portfolio. All right, CIMB C2J. Besides from that, P metal, press metal C2K, so as the shares hits its new high, press metal C2K actually garner a lot of interest from the investors as well, with the exercise price of 7 ringgit and 20 cents. So the share price is actually above the exercise price already. Then in this case, they're already gaining the intrinsic value. All right. So but that's one thing for those warrants that's in the money. It will actually move very fast, means it's very sensitive. In the case that the share price move up, then everyone will be happy. But if it comes down, it will actually flips down very fast as well. So what's important is that you have to use the live price metrics to gauge your entry and exit point. Okay, SP suggests C1G definitely is actually linked to the construction sector boost about 2 weeks ago. Okay, however, of course, the boost was quite fast. In that case, the warrants actually gained more than 100%. But in the case, after that, it actually went came down on SP Satya shares. So the warrant price actually flipped down as well. So this is actually the power of leverage effect. If you make money, you'll make more. But if you lose money, then it's actually amplified as well. So YTL Power C1K was also one of the popular YTL Power core warrants among the peers, means that other core warrants in the market. With an exercise price of 3.20 ringgit, which is actually way below the target price given by Max earlier on. So we can actually look into it later. While Nadia Speedmart C27, I think it's for consumer sectors, Nadia Speedmart still one of the warrants that actually a lot of investors are looking at, with an exercise price of about 4 ringgit. Axiata C1Y, all this while is not like being highly traded, but there's like 1 or 2 days, it's actually the top traded among all Axiata core warrants with an exercise price of 2.65. So we actually saw a lot of rotational play within sectors, right? Among the sectors. So Axiata was actually one of the highly traded warrants that time. And not to forget to mention Gamuda C4I. So Gamuda is it has been on a roller coaster ride. Okay, so Gamuda C4I also one of the top traded warrants for RHB, because people are buying and selling. So we actually see a very high interest on that. Gamuda C4I with an exercise price of 4.80 ringgit. Okay, so for KBJ C32 was just I would say yesterday we actually see a very, very high traded volume, okay, with an exercise price of 2.80 ringgit. So some of the warrant in focus, I just put it here because I want to share with you how we actually use the RHB warrant website to get, to maneuver on that, and then to check on how do we actually check on the warrants metrics. Okay, go to toolbox, go to warrant metrics. If you know what kind of warrants that you want, like for example, today you're aligned with Max's view on YTL Power C1K, and then you can actually just type YTL Power C1K, and then you'll be able to see the live price metric. So when you buy the warrants, you have to look at the market share price in the market, and then you use these warrant metrics to see what is the price to enter and buy and also sell. Okay, normally we buy on the market at the ask price, and then we sell it at the bid price. Okay, so in this case, with a sensitivity of 5.7 ticks, I would say honestly, 5 ticks is actually not very sensitive compared to, you see, Public Bank and JTS is like around 2 ticks only. Okay, but this one, it actually provides a lot of cushion if it comes down, so you have time to run away from your trade. Okay, cut loss, stop loss, and stopping loss is actually very important in current market situation like yesterday. So you have to, for those investors who's actually investing in call warrants and also put warrants, anything about structured warrants, do remember to actually set a stop loss for all your trades, because when it comes down from 6 cents to 5.5 cents is actually a lot. All right, so it actually impact on your portfolio return and also losses. Okay, so YTL Power C1K is actually I would say one of a very, it's relatively not sensitive, but it's still decent, while the bid and ask price of the warrant is about 6 and 6.5 cents. So imagine half a cent of a percentage gain, half a cent gain in percentage of like 6 to 6.5 is actually a lot as well. All right, so for banking sector, we can actually look at Public Bank C2C, maybe too small. C2C. All right, so C2C, if you want to compare, the price of the warrant is actually relatively smaller than, it's way smaller than the mother share itself. So if you want to trade, you want to trade on Public Bank instead of buying it and keeping it. We call it investing, right? So you want to trade it, you can actually look at PB Bank C2C, where the price is around like slightly more than 10 cents. It depends on the mother share after the market opens. And last but not least, JTS C12. Yesterday, JTS mother share actually gained very strong momentum, but actually we saw quite a slow volume in the call warrants. JTS C10, 11, 12, 13, 14, okay, like that. But in the case of when the mother share is having huge momentum, it's like going up very fast. If you want to chase on the mother share, yes, by all means, because the mother share is costing around 1 ringgit or 1 ringgit, a little bit more than 1 ringgit, so it's actually fine. But if you want it to be fast and also having a high gearing effect, then you can actually look at JTS C12, where I would say this is very sensitive when there's only 2 ticks. If the momentum is bullish, then it's actually very easy for you to make a gain from that. But on the other hand, if it drops like yesterday, before closing, it actually dropped back to about 1 ringgit and 10 cents, then you might have to hold it for another day. Okay, however, don't have to worry about the time decay, because you still have to worry about time decay, but if for 1 or 2 days, as the expiry is actually in July, then the time decay is not that much compared to those that's expiring very, very soon. Okay, so I think if you have anything in your mind, just put in your watch list. So whenever the market has entered into you think you want to collect at weakness, then you can actually do it. Okay, so thank you so much for dialing in today, everyone. Wish you have a happy trading day, and we'll see you on Monday, RHB Morning Kappa at 8. Thank you.